Hello, everyone. Welcome back. I got some really good ones for you today on this Monday, October 13th, 2025. A lot's been going on with those markets, never a dull moment for the markets. So that's what we'll be focused on for today's video. Welcome back. Glad you made it. Glad we could hang out together. And let's dive right into these markets, shall we? So we've had a little bit of drama over the last few trading days, especially on Friday of last week when Trump threatened an additional 100% tariff on Chinese goods. First of all, I'm quite certain, guys, that that's a bluff. Because if Trump were to slap an additional 100% tariff on Chinese goods, that would effectively make Chinese goods sold in the United States completely unaffordable. Global trade would be breaking down between the world's two largest economies. You know, the first largest economy being the United States and the second largest economy on the planet being China. So it's like the parents are fighting again. There's drama there, and that has serious implications and knock-on effects for global trade. We kind of seen that reverberate through markets, especially on Friday. So what's going on? Well, it's a bit of a repeat going back to April when we first had Trump roll out with these reciprocal tariffs and then China retaliated and then things kind of calmed down for a few months. Well, it looks like they're flaring back up again. So if you recall, back in April, Trump came out swinging with his reciprocal tariffs on China, and they retaliated by adding 7 rare earth elements to an export control list. Like, they basically slapped export controls on 7 of these rare earth elements that the United States really needs for their electronics. You know, we need these rare earth elements, guys. We need them for things like semiconductors, electronic vehicles, F-35 fighter jets. You kind of get the idea. Like, a lot of our electronics really need these rare earth elements. Go ahead and Google rare earth elements. I believe there's like 17 of them. They have some really weird names. Well, back in April, China slapped export restrictions on 7 of them, and then as of Thursday of last week, they upped the ante to 12. So they added 5 more rare earth elements that they slapped export controls on, and then Trump retaliated by threatening, not to meet with Xi in a couple weeks at their APEC meeting in South Korea. Trump also said, maybe I'm gonna, up the ante and double your tariffs. So, a lot of jawboning rhetoric, tit for tat, going back and forth between the world's first and second largest economy. The way that impacted markets is on Friday, we saw that tech-heavy NASDAQ come down about 3.5%. NASDAQ, they need those rare earth elements, guys. We're talking technology stocks here. The NASDAQ also sold off the hardest because it doesn't have a lot of value stocks, don't pay much in terms of dividend. That NASDAQ is the more volatile of 3 major stock indices because it's just like growth, growth, growth. You know what I mean? So NASDAQ led the way in Friday's sell-off. S&P 500 came down like 2.7%. The Dow Jones came down 1.9%. The dollar actually sold off, which we should focus on that for a moment. Normally when the 3 major stock indices sell off and volatility spikes, you actually see a safe haven bid in the dollar, but that wasn't the case on Friday, you guys. And that's freaky, okay? If you're in a situation where the 3 major stock indices are falling and the VIX is spiking and the dollar is falling, like, that is some freaky stuff. Well, what's going on? Why isn't the dollar acting like a safe haven? Well, we've been discussing it ad nauseum on this channel, that gold, silver, Bitcoin, these are replacing the dollar as the safe haven asset. So people aren't seeking safety in the dollar anymore. On Friday, we saw traders dumping dollars, buying euro, buying gold, buying silver, buying Bitcoin. So there you go. The dollar's just kind of left out to dry. And the whole world sees it, guys, which is pretty freaky. This era of American exceptionalism might be coming to an end. Just the dollar might be losing its world reserve currency status. And, America stands to suffer the greatest if that were the case. A lot of these other fiat currencies, they don't have anything to lose. Like, the peso was worthless a couple years ago, and the peso is worthless today, like, big whoop. But the dollar, being the world's safe haven, world reserve currency as of just 5-10 years ago, with that changing, we have the farthest to fall, guys. And priced in gold, that dollar is getting incinerated. The dollar's going straight down, the gold's going straight up. We got gold today over 4,100 per ounce. You guys, that's the canary in the coal mine screaming something is wrong. So we really do need to be paying attention to that. But anyway, on Friday, the 3 major stock indices sold off. The VIX popped. The dollar sold off. We do see the 10-year Treasury acting as a safe haven asset, though. Traders were buying bonds on Friday. They're trying to lock in that yield on the 10-year at like 4.05% because ultimately they believe, in the coming weeks and months that 10-year yield is going to fall to like 3.8 to 4%. And as the yields come down, it pushes the bond prices higher. So traders are going to lock in that 4% yield now. And then by the time we're at 3.8% on the 10-year, the price of that bond that they bought at 4% yield is going to be a lot higher. So we do see the 10-year Treasury acting like a safe haven. You know, the market's worried about growth whenever the world's first and second largest economies start to argue with one another. That, you know, freaks people out with regard to how much growth we're going to be getting in the future. Like, that could really affect our GDP. And if people have concerns about growth and recession odds increasing, they still go to treasuries. They're definitely going into gold. They're going into silver. They're going into Bitcoin. That's kind of what you got going on, you guys. Now, we did see crude oil. We haven't talked about crude in a while, so we'll spend a few minutes on oil. We did see crude on Friday sell down to 57 a barrel. Guys, I'm very bullish energy, okay? Nothing's changed here. I still like tech stocks. I still like energy stocks. I like crypto. I like precious metals. There you go. So we got crude oil selling off to 57 a barrel on growth concerns last week. Now we're hanging out right now around 59 a barrel. I'm not really too worried about it, guys. I really like the mega cap energy producers like ExxonMobil, Chevron, ConocoPhillips, and their cost on some of their wells is only like $15 to $25 per barrel. So they spend $15 to $25 to get a barrel of oil out of the ground, and then they turn around and sell it for 57. Their profit is still pretty good there. Now, all-in cost, so that includes their taxes and royalties, permitting, environmental compliance, research and development, exploration, those run up the all-in cost for those mega cap energy producers. But still, all-in costs for energy producers are like, for the big ones, are like 35, 40 a barrel. So if your costs are $40 a barrel and you're selling it for 57, you're still making a good profit there. Now, if crude oil were to keep falling below all-in costs, let's say it goes down to like 30 a barrel, well, now I'm very bullish because the beast system will protect those mega cap energy producers. The powers that be want to keep crude oil in kind of a Goldilocks zone, a range. If it goes below, like call it 50 a barrel, that's going to put a ton of downward pressure on the mega cap energy producers, could even create like a deflationary death spiral. So they're gonna want to keep a floor under crude. And then if crude were to go, say, over 100 a barrel, starts to run a little bit hot and go into like kind of a boom, well, they kind of want to tamp that down, because if oil runs too much, too fast, the oil price spikes too much, that drives up core inflation, and then all the goods at the grocery store, everything. Like even this shirt I'm wearing, if I read the tag, it'll say polyester. That's plastic. That's oil, guys. These sunglasses are oil. The energy to make this paper from wood is like oil. It's all oil. The concrete, the asphalt, what you're putting into your car, there's like 6,000 petroleum derivatives that like you use every day. So if the oil price were to get too high, that drives up core inflation. That makes the other 6,000 derivatives of oil all very expensive. So the powers that be are going to want to keep it into a range. Personally on this channel, like when we first started, I knew gold was going to do really well. I knew Bitcoin was going to do really well. I knew stocks were going to do really well, but I really did think crude oil would be a lot higher. My target on crude oil is like 150 a barrel, and we topped out at like 120 and then tanked all the way down to like 60. So this tells me, guys, this is a good buying opportunity in my opinion. We don't do buy or sell recommendations on this channel. I'm leaving that to you, but I'm just telling you, I'm just giving you a little sense so you can go, sniff around in the tree line. Look at mega cap energy right now, okay? It's not in a bubble. We've been talking about frothy, inflated, bubbly markets for the last few months with very little mention of energy. The energy sector, it's very boom and bust, but right now we're not in a boom, so that would be a good time, in my opinion, just in my opinion, it'd be a good time to maybe look to nab up some of those cheap energy shares before we go into a boom. It's very boom bust, and we're kind of in a bust right now. So, but I remain bullish, and I'm not really worried. Like, let's say you had bought a bunch of Chevron a few years ago. Well, you come back today, dude, you're probably down like 8%. It didn't blow up your account. And we believe in diversification on this channel. Diversification is a feature and not a bug. So, if you're 25% gold, 25% crypto, 25% energy, and 25% tech. Well, we went 3 for 4 right there. And then the fourth, the one that we're kind of worried about, energy, it's barely down, guys. And that's also because we want to stick to those mega cap producers. I don't like losing, okay? So I stay away from those small cap, mid cap, exploration companies. We just want to own the big boys, guys, and they pay out a good dividend while you wait. So you could maybe look to do a little bit of dabbling in the energy market, especially with WTI crude only at 59 a barrel right now. Gives you plenty of upside, guys. And your downside is kind of limited because, again, if we go below cost, the beast system will protect it. The energy sector does get offered beast system protection. You know who doesn't get offered beast system protection? Those altcoins, and we're about to talk about those. Those altcoins got hit pretty good, you guys. So, all right, sorry about this plane. You know, only when I do a video, guys. But hey, we need rare earth elements because we're flying planes all the time. Have a lot of technology. You know, Boeing really needs those rare earth elements, guys. So we'll see if Trump meets with Xi in a couple weeks, and we can kind of give the global market a little bit more certainty, maybe claw back some of these tariffs, claw back some of these export restrictions. You know, play nice, guys. We don't want the world's first and second largest economies fighting. But I mean, man, it's really spooked markets on Friday. Markets are clawing back today, though. We have that NASDAQ up 2%. We have the S&P 500 up 1.36%. That Dow Jones up about 1%. The Russell 2000, the small caps up about 2.7%. We do have the dollar trying to claw back from that sell-off on Friday. Dollar lost about 0.5%. Now it's up about 0.3%. Got the VIX coming down, which is good to see. Gold, kind of talked about it, over 4,100 per ounce. Crazy, guys. Silver just broke its $50 per ounce all-time high, and going back to 1980, guys. So silver has only just passed its high from 1980. To me, that tells me we have a lot of room for upside there. But I don't do buy or sell recommendations on this channel. I'm just telling you, you know, what I see going on. And I think silver, which we've been saying is a sleeper metal and gonna wake up and smell the coffee. Well, it's waking up and smelling the coffee, and it's, you know, it's going to the moon. So good for silver. Got crude oil right now at 59 per barrel. We kind of talked about energy. Got Bitcoin at 115,000, and those alts getting smashed right now. The alts do not get beast system protection, as I said just a couple moments ago. Let's talk about it. So over the weekend, we saw the biggest liquidity event and flash crash in altcoins in crypto history, you guys. Pretty crazy. And you might be like, okay, well, what was the catalyst? Believe it or not, the catalyst for that was Trump tweeting about, thinking about upping the tariffs on China. That's ridiculous to me, guys. That's hardly a catalyst, especially given Trump's track record of tacoing, and, you know, the market's already seen this movie before. So for alts to be selling off, I was like, that cannot possibly be the reason. But that's all I could really find on it. And then I look online, can't really find anything. And then I asked Grok, because I heard about it like on Twitter somewhere, that some trader had netted $190 million over the weekend betting against Bitcoin and Ethereum right before Trump's announcement of the tariffs. And yeah, it's true, guys. Look it up. A trader, anonymous trader, netted $190 million betting against the Bitcoin price, betting against the Ethereum price, only 20 minutes before Trump's announcement of the tariff. So somebody had foreknowledge of that. Maybe it was Trump's cronies, maybe it was his admin, maybe it was somebody else. Maybe it was a group working with Trump to kind of keep Trump's hands clean. Maybe it could be totally somebody else who, you know, I don't know. It could be Binance, maybe China's doing it, I don't know. But we had an anonymous trader out there who knew 20 minutes before Trump would tweet about the tariffs. He knew about it. It's all on Hyperliquid. That's the cool thing about these decentralized exchanges. We can all see it. It's very transparent. Some trader was betting super heavy against Bitcoin, super heavy against Ethereum, and then it looks like they covered 90% of that Bitcoin short and all of the Ethereum short. So they netted $190 million in 24 hours betting against the altcoin market on no other catalyst other than Trump tweeting what he always does. I mean, guys, the glove does not fit. Something is going on with those altcoins. And then we saw him sell off like 60 to 90% in a matter of minutes. I mean, guys, that liquidity crisis was worse than FTX, Terra Luna. Like, I mean, in those cases, you actually had a reason to be bearish and worried. And this time, it's like, what? That's the stupidest reason for an alt to sell off 90% I've ever heard. I mean, the dollar's still being weakened, you know, interest rate cuts are still coming. So like, that was pretty wild to me, guys. Like something, you know, something real fishy was going on in the crypto market over the last 48 hours. And I know you're thinking, well, duh, it's crypto. It's like a bunch of unregistered tech stocks. Of course it's fishy. But I mean, like like there's levels to this, guys, and that was like extra fishy, you know. But I still like some of those altcoins. I like Bitcoin, obviously, and Bitcoin's doing fine. It's stable right now around 115,000, like up and away for Bitcoin. But I do like some of these other altcoins, guys. I like Solana, okay? I like a little bit of XRP. I like Cardano. I like Avalanche. Maybe a little bit of Hyperliquid for you. Maybe a little bit of like Aster. You know, people are getting real into trading perpetuals and just trading perps on like 100x leverage. So that's kind of the new technology that's visiting the crypto market, is this whole trading perps. Go ahead and Google trading perps, trading perpetuals. Ask Grok, what is Hyperliquid, what is Aster, what is trading perpetuals, and it'll kind of give you the lowdown on that. So maybe get a little bit of exposure to that, but I'm still, you know, I like Solana, guys, and I still like my Solana meme coins, even though they're getting crushed, especially with a lot of speculative capital going into like Hyperliquid and, you know, Binance, BNB coin doing really well. Like when I check Dex Screener, I see like a lot of the trending tokens are BNB, so that chain's really popping off for right now. So, you know, it could be something there, maybe not, but I'm sticking to my guns, guys. I like Solana. I like the Solana memes, like Retardio. I have 170,000 Retardio tokens now, so having fun with that. I still like some of those ETH memes, like Pepe. I still got a big old bag of Pepe. I like MOG, SPX 6900. Harry Potter, Obama Sonic 10 News. So some of those ETH meme coins I still really like. But yeah, guys, those altcoins got crushed, and, you know, still like Bitcoin. So there you go. So that's really what we got going on for markets, guys. I feel like I pretty well covered it for you. We talked about the drama between United States and China popping back up, you know, a repeat of April all over again on Friday, talking about the dollar losing its safe haven appeal, talking about the global economy just kind of slogging around. You know, recession odds are kind of increasing, especially with this drama between China and the United States. That could have a negative effect on our GDP. We're talking about things really slowing down, you guys. So I'd say recession odds right now, they're like 35-40%, you know. And whenever drama pops off between United States and China, it goes up, and then markets react accordingly, but you don't see a safe haven bid in the dollar because the dollar's not the safe haven anymore. So that's just kind of what you got going on, guys. You see how we can kind of map everything and understand how the currency is kind of sloshing around. You know, if you're really into, like, let's say you only care about oil, well, you're kind of flying blind, because the oil price is derived from what's going on in the debt market, from what's going on with these other commodities and asset classes. So you see how we kind of take a step back, and we can see how currency is leaving one place and going into another, and leaving one place and going here, and then we kind of assign the reasons why, and maybe we would expect it to go a certain place, like into the dollar, but then we go, no, we know it's not going to go there this time because of these reasons. That's kind of like your macro, you know, and I think we've done a pretty good job of staying over the target, you guys. So discuss the drama going on with China and United States, discuss the altcoin flash crash, discussed how money is sloshing around in the global economy, discussed energy. I still like nuclear, you guys. So, you know, stock ticker CCJ, Cameco, not a buy or sell recommendation, but Cameco, however you want to pronounce it. Go ahead and take a look at that. Stock ticker CCJ for nuclear. Guys, doing extremely well. So I'm bullish energy, I'm bullish nuclear, I'm bullish crude oil, I'm bullish natural gas. You know, our energy needs are infinite, you guys. On the one hand, people will tell you, we're like swimming in, we're swimming in oil, we're swimming in natural gas, we're swimming in these things. So of course the price is coming down over time. Like, a lot of people believe that, you guys, but the reality is, although I like solar and I like nuclear, we need a diverse energy portfolio. So we're still going to need oil, we're still going to need natural gas, and assuming your civilization is growing, your energy needs are infinite. So, and some of these renewables, they're not cutting it, not yet anyway. But I like them. I wish we had a cold fusion machine that could spin a turbine like for free forever. You know, I should give me a box that I can put one unit of energy in and get like 5 out. You know, that might be God. You know, there's no such thing. So we need those non-renewables as well. We just need to diversify our energy portfolio, learn how to store this energy better, feed it into the grid better, use it more efficiently, but we're going to need it, okay? So So nothing's really changed here, you guys. I still like gold. I still like tech. I still like energy. I still like precious metals. I still like crypto. I still like nuclear. Like nothing, guys, nothing's really changed for me. Let's talk about interest rates, and then I'm going to let you guys go. So I did think the drama on Friday might increase chances of a 50 basis point cut at the next meeting instead of a 25, which would also explain the dollar selling off. You know, if the dollar thinks it's going to get a 25% cut to interest rates and then it gets a 50, that's an even steeper cut, weakens the dollar even more, so should smash the dollar. But it looks like as of right now, we're going to get a 25 basis point cut at the end of the month, then one more 25 basis point cut in December, and then an additional 3 25 basis point cuts for 2026. So we got 5 25 basis point cuts in the chamber. Guys, we're easing. Okay, this makes me hyper bullish. This makes me very bearish on the dollar and very bullish on markets, because the Fed, even though they should be raising interest rates and breaking the back of inflation and keeping gold prices from crashing up to 5,000 per ounce, and keep a lid on home prices and, you know, rents and the CPI, Fed's pretty much telling you, yeah, we know inflation's a problem. Yeah, we know we've destroyed the middle class. And guess what we're going to do now? 5 more interest rate cuts to make this way worse. It's kind of like the house is on fire, gold's screaming to the moon, the canary in the coal mine is dead. Everybody knows there's something severely wrong with the dollar. And then the Fed, who's supposed to show up as the fire department, shows up with a bunch of jerry cans full of gasoline and just starts pouring them all over the fire. That is a moral hazard. It's diabolical. It's destroying our country. And look at the Fed. Their policy, their intentionally bad policy, in my opinion, is just going to have more bad knock-on effects. That dollar is melting like an ice cube on a hot summer day, and I see no relief in sight. 5 interest rate cuts coming, guys. And as soon as something goes wrong and deflation really tries to take hold in these markets, the Fed just cuts more aggressively. So it's crazy, guys. Like, if unemployment numbers keep climbing, like more people keep losing their job, that just means the Fed's going to cut even more aggressive and destroy the dollar even more. That is not what this country needs, but it's what you're getting. So it's almost like bad news for the economy is even worse news for the dollar. And then good news for the economy, you know, it's basically for the Fed, it's like for the elites, it's like, we're going to play heads or tails, okay? And heads I win and tails you lose. So it's like no matter what the Fed does, they're going to make sure that the middle class gets eviscerated and the elites double up. Because if the economy is strong, the Fed's still going to keep cutting interest rates, and if the economy is weak, the Fed's just going to cut even more. So all that missing growth, guys, all that worry about global growth is just getting thrown onto the back of an already weak dollar, and it's sending those other markets crashing up, kind of as we discussed. That's really all I got for you guys today. I hope you got something out of this. Thanks for hanging out with me. Like, subscribe, comment, share, whatever. You guys are awesome. Okay, we're gonna keep everything on an even keel. We're gonna keep going. We're gonna keep our oars in the water. Okay. Till next time.